This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, May 7th, 2015. Euro dollar. So the euro continues to extend its gains following the break of a neckline and triggering of a double bottom in the previous week. The break of that double bottom now projects a fresh measured move up towards the 1535 area, which coincides with the February 2015 peak. At this point, the downtrend does remain firmly intact, and so if the market does trade up to the 115.35 area, a lower top will be sought out in favor of a more underlying bearish resumption. Sterling dollar. So cable right now is locked within a choppy consolidation after the market recently stalled out just shy of the 2015 high at 55.52 and stalling out right around the 155 area. At this point, it's difficult to determine which way the market will break, though the market is locked within a broader downtrend, and so it is favored that the market will continue this way back towards the recent 2015 low at 145.65. Really only back above 155.52, which represents the 2015 high, would compromise the bearish outlook. Dollar yen. So dollar yen continues to chop around with the market very well supported on dips into the 118s and very well capped on rallies into the 120s. At this point, it's a bit of a wait and see, though with the broader trend still favoring the upside, the market is eventually seen above 122 and towards the 125, 130 area further up. At this point, a breakback below 118.23 would compromise or delay the bullish outlook, but only a breakback below 115.55, the December low, would really compromise the structure. Euro Swiss. So Euro Swiss has seen a bit of a pullback in recent trade, though the market is now looking like it wants to put in a higher low somewhere around the 103.45 area in favor of the next upside extension back above recent highs at 105.25 and towards that 108.15 high that we saw on the 20th of February further up. At this point, only a break and close back below the recent low that we saw at 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So despite some gains in recent trade with the market trading back above 80, the market isn't expected to run much higher with some solid previous support turn resistance in the 80s and the market still locked within a broader underlying downtrend. At this point, look for a lower top to carve out somewhere over the coming sessions in favor of the next major downside extension back towards and eventually below the recent 2015 and multi-year low at 75.60. Dollar CAD. So dollar CAD has seen a nice pullback in recent trade with the market taking out 123.50 following a multi-week consolidation and trading down to a measured move objective in the 11900s. At this point, the market should look to base out in favor of a bullish resumption back above 128.35 and towards the 2009 peak at 130.65 further up. Really only a close below 119 would compromise or delay the bullish outlook. Kiwi dollar. So Kiwi has done a good job of stalling out in recent weeks after the market stalled out at 77.44, and the market is looking for a bearish resumption now back towards that 71.76 yearly low and for a break of that level to open the fresh downside extension towards the 65 area further down. At this point, a break back above 77.44 would delay, while really only back above 79 area would compromise the bearish outlook. SPX 500. So the S&P 500 continues to show signs of topping after the market just broke to a fresh record high beyond that February peak at 2120, trading up to 2126 ahead of the latest pullback. At this point, there are signs of a contraction and volatility warning of a break, and that break could be to the downside given how intense the uptrend has been over the past several years. Look for a break and close below 2070 to open the door for the next downside extension, though a break below critical support at 2040 will be required to confirm a topping structure and accelerate declines. Gold. So gold has been in the process of consolidating over the past several days with the market locked between 1170 and 1224. But it is possible that the market is putting in a longer term base and it will need to hold above 1170 to confirm and then break back above 1224. A push above 1224 would help encourage the basing outlook and open the door for an acceleration of gains back towards and above 1300. Meanwhile, a break and close back below 1170 would negate and expose a retest of that critical 2014 base at 1131.